Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Wednesday, July 22nd, 2015. Charts, as usual, brought to you by eSignal. If you have not taken a trial of our services, feel free to do so. Here's a look at the ES front-month futures contract daily chart. This is the S&P index, essentially. Rolled back over. We talked yesterday about the stealth sell-off that was occurring under the hidden darkness of gaps up in stocks like Google and Netflix. Meanwhile, we were getting some pretty bad advanced decline numbers, declining stocks leading advancers the last day or two in the middle of what looked like, of course, a run-up in the market led by just one or two stocks here and there that were very heavily weighted stocks. So today was sort of the culmination of that coming into play. Let me take a quick look. The advanced decline ratio was now negative 600 or so on both the NASDAQ and the New York, which isn't as bad as the last couple of days, but we did sell off. So the S&P lost 9 points, and the NQs and the NASDAQ side lost 5. You can see here on the daily chart that we've kind of come back. So we didn't make new highs. This leaves us once again in this narrow range that we've been stuck in for a while. Here's the NDX 100, again up the last couple days. Now we do have Apple earnings just came out here after the bell, and they're down a little bit, about 10 points in the aftermarket. Not a big deal, but that'll probably push futures lower for the open on Wednesday. The SOX was basically unchanged. Look at 5 days in a row, dead flat on the SOX. Biotech's down 25 after being much lower, actually. Google gained 2.5 and actually swept back above the highs from Friday in the process. Apple was down ahead of earnings and now down back in the 120 area, which will put it somewhere in that 120, 122, puts it near the lows of since March, February, essentially. The VIX was down 3 cents, leaving it down near complacency land at 12 bucks. Here's crude oil gained 17 cents to 50.6250, and gold down a little bit again, 6.5 points. The sell-off in gold that we were looking at for a week or two really coming to fruition quickly here. And here's a look at the trend. Closed at 1.03 with the 10-day moving average now at 1.24. Here's the advanced decline ratio. You can see the last 3 days have all been decliners leading advancers despite the market moving up. That is never a plus. And once again, 1.6 billion. That's actually a little less than the last 3 days where we were hitting 1.7. So earnings season continues. We still have many left to report, and Wednesday and Thursday in particular, some of the big most earnings releases of the entire season, and you could definitely feel it today in the market. It's not just about the volume right now. This is how the core 8 days of earnings every quarter are significantly different in trading style than the rest of the quarter. Just so many people hurry up and waiting for the next earnings to come out after the bell, and so you get a gap from whatever comes out, and then you trade for a little bit, then you sit all day, and then you prepare for the next set of earnings coming out after the bell or before the bell the next day. So it's been sort of a typical earnings season, very unexciting. The bigger players tend to sit out or do a lot less during this window, and you can certainly see why just looking at some of these charts that we saw. But we only got 2 days of it left, and it starts to peter out around Thursday, even though there's a lot of reports after the bell Thursday. Most of them are done, statistically by then. So we will see what we get. Let's take a look at the intraday action on the ES and 5-minute candles so we can see what the market did. Little gap down, came back up. The gap fill was the high of the session about 40 minutes in, and then we rolled over. If you do find these videos useful, please like them on YouTube. It does help us out. We'll be in the lab. Have a great trading session.